So I think one of the things that's helped us is that we invested. I say we, my wife and I invested on the LP side first to be able to kind of see kind of what it felt like.
Dan Hanford, welcome to the show today.
Thanks, Michael. Appreciate it.
That's cool. So you've had lots of success in syndications. You've raised I don't know close to $500 million, and in a very short period of time. And sometimes when you hear these kind of numbers, people are like, "Oh, great, Dan, that's good for you." But how is that going to help me? I haven't raised any money yet, right? So let's rewind the clock a little bit. How did you get started with raising money back in whenever you got started? What was going on? How did you actually get in the game?
Yeah. So, my background is really as a chiropractor, and, I'd built some clinics up to the point where they were pretty much running on their own. I was still going in there as the CEO, running the day-to-day operations. But I really felt like I could step away from that business and started to focus on something else that I had already had done some research in, and real estate really was what I was wanting to go into. And so I stepped away from that full time, made a decision on a Friday, talked to my wife on a Saturday. Of course, she's like, "What are you talking about?" And then on Monday, I had a conversation with my COO at the time, who I told him I wanted to promote him to the CEO position so I could step away. And on Tuesday, made an announcement at 7:30 in the morning to my team, and that was in February of 2018. And then started to really dive into the real estate side of things and hired a mentor. First started investing as an LP alongside some other groups to kind of see what it felt like from the LP's perspective, and then started to with my mentor, raise some capital for a couple of projects. And then after raising capital for 3 projects, we ended up buying our very first deal in December of 2018. And we ended up raising about $4 million in 2018. 2019, we raised 32 million. 2020, we were at 61 million. And then in 2021, we went to 196 million. And last year in 2022, we ended up raising right at about $294 million to get us to we're right at about 530 million right now that we've raised since 2018.
Yeah, so I understand that growth. That's phenomenal. Congratulations on that.
Thank you.
And you built a fantastic team as well in the process. Now, when you first got started, there's different ways you can get into syndication, and you actually touched on several of them. I want to kind of shine on it. Number one is you said I want to be an LP, a passive investor, and just to kind of see what it is. And then phase 2 is you got into capital raising, where you just raised capital before going into operations. Can you talk about each of those phases in a little more detail so someone better understands the different ways you can get in the syndication business?
Yeah. So I think one of the things that's helped us is that we invested. I say we, my wife and I invested on the LP side first to be able to kind of see kind of what it felt like, right? I also wanted to kind of know like what I'd liked and what I didn't like as an LP, so I could change some of that messaging and maybe increase that communication process with our LPs so that we could continue to keep our LPs next to us. And we have a very high repeat investor rate. We're tracking those very closely, and we're about 72 to 73% repeat investor rate in every project that we put together. And that's very, very strong. And one of the reasons why we have that is because we've learned kind of what it felt like to be an LP and what we liked and what we didn't like, and started to incorporate the things that we did like into our LP process, and then of course try to remove the things that I didn't like about the LP process. And really, I think the number one thing that most investors keep on telling us day in and day out that we do really well is we have a lot of great communication, whether it's good communication or whether it's communication that's providing good news or bad news. It's just communication, so that they don't have to be reactive in getting information. We're just very proactive about sharing updates to them. We give out updates on every single one of our assets by the 14th of every month, and giving them the performance from the prior month. And then kind of looking at it from the perspective when we first got started of kind of like, co-GPing and kind of partnering with other groups first, our main objective for doing that was that we didn't set out to, be a capital raiser and partner with people to bring capital and kind of participate in projects to do that long term. It was kind of a stepping stone for us, right? Because we knew it was going to be hard for us to acquire our very first one was a $8.9 million asset, 130 units out of Greenville, South Carolina. That was our first acquisition, but no one would have like trusted us. No banks, no investors would have trusted us to, manage that type of an asset unless we had some form of a track record beforehand. And so being able to partner with these other groups allowed us to kind of like be in the room and kind of shadow and kind of get the process down, and allowed us to increase our credibility with not only the investors, but also the sellers and the brokers, as well as, of course, the lenders. So they were more confident in us being able to, basically give us money to be able to manage it for them. And then that's really what kind of catapulted us, is that track record that we built from the very beginning before we started going into the active side of it outside of just raising the capital.
Yeah, that's really good insight. I am so curious because you guys just kind of, so you went to the, your co-GPing on things, but how did you guys raise close to 300 million a year? How did you scale up to that point? Because that is wild.
Well, it's funny because we ask ourselves that same question, kind of like retrospectively look at it and go like, what is it that allowed us to be able to raise that kind of capital one year? Because there's we definitely see groups out there that brag that they acquired that much in assets every year, and we're actually raising that in equity in a single year. And I think it definitely goes back to, from the very beginning, setting out that investor relations process to make sure that we, for lack of better words, built a fence around our investors so that they could continue to invest with us. And so I would say that there's not just one thing that we did that has got us to where we are today. It's kind of an exponential benefit of multiple things adding on together over time that has allowed us to be able to build on that, month over month and even day after day, that allows us to be able to build that credibility with our investors. And, we don't have like 10,000 investors either. We've raised 294 million in one year from a group of about 2,000 investors. So it's not that we have this like huge list. But I will say that we do have a huge list of investors, but only about 17% of them are actually investing in a project. So when we bring in 100 investors, only 17 of them at the end of the day are actually going to invest in something. The other ones are just kind of sitting on the sidelines, kind of watching us, and then waiting to jump in when it's time for them to jump in.
Let's compare a little bit on how you raised money in 2018 when you raised $4 million versus how you raised money, so let's say last year when you raised almost $300 million. Compare the two. Well, how were you raising money back then? And then how did you raise money last year or now?
So in that first year, it was very challenging because we really didn't have an investor base, right? And so, most of the time you'll get information from different, mentors and coaches, and they'll say, start with your friends and family. Well, I had a few friends that invested with me, but I really didn't have, even up to this point, I really haven't had any family members invest with me. And it's because it's not that I don't have a good relationship with them. It's just, I don't have a very wealthy family. I don't come from a lot of money. And so it's not like I have a lot of family members that have money to invest. And so that was really a no-go for me, right? I couldn't just go call up my dad or my rich uncle and say, hey, would you invest 100K in my next deal? I didn't have that. And so it was really the relationship building of some of my really close friends, that because the biggest disconnect they had is I thought you were a chiropractor.
Yeah, right.
Why are you asking me for 50 to 100,000 to invest and buy some real estate? There was a messaging disconnect there. But my close friends that I knew had some ability to do that, they trusted me. They said, well, I know what Dan has built up to this point. I know he can continue to build and grow, and so I trust him. And so some of those investors have invested in every single one of the projects we've put together up to this point, and they've benefited very well with that. But at the very beginning, it was really scratching like my list of friends. I remember like sitting down, taking my cell phone, and one of the projects that I did was I went through all like the contacts on my list, and I was like, nope. Oh yeah, maybe. And I'd like write that person's name down and put them on a contact list, and I'd keep scrolling on my phone and going nope. And I'd find somebody that maybe. And so I'd like make some phone calls to people that were in my contact list. But that was really kind of how I got started in the very beginning.
So you got started that way, and then you had to, scale. So your scaling process was, just on the capital side. I mean, this is something that most people, the majority of people out there, cannot raise this much money. And you guys have figured out a way to scale to that. What was your scaling process to kind of get to this level of raising?
Yeah. So the biggest thing that I would say that we started to do is to build out an authority platform that allowed us to be able to be in a position where we're educating people that are interested in investing in multifamily. And a lot of you who have followed me up to this point know that we have this educational platform called the Multifamily Investor Nation, and we're not selling any coaching programs or anything like that, but we're the whole purpose of that was to create a authority platform that allowed us to be the educator, to be able to teach people all things around multifamily, and we don't hold back on. And we've done weekly webinars every single week. Now, of course, we're starting to incorporate our team members into that process as well. But we do weekly webinars that are free. We don't charge for them. Obviously, we post them on our YouTube channel, and that helps us get some more reach online and stuff like that. But what the whole purpose and goal of the Multifamily Investor Nation is to have people that are interested in multifamily investing go online and research it, find a video of us, find an article or find a webinar or whatever that want to join, and then they get connected with us and we teach them all things around multifamily, and they go, holy cow, this is a lot of work. I don't really want to do this business. Here's my money. You do it, Dan, right? I want you to invest it for me. And so that's the whole purpose of the whole Multifamily Investor Nation, is to create an authority platform that provides as much value as possible to people. And now we do have like live in-person, an event once a year. We also do some intensives throughout the year where we'll do an MFI intensive on raising capital. Matter of fact, we just did one on private lending. It just wrapped up today in my office. We've done one on asset management and acquisitions and dispositions. And so we've started to do some of those types of 2-day intensives, like workshop style with 30 people max. But our goal is we definitely don't want to do any type of one-on-one coaching. We just don't want to do that. We feel like that might hold us back from being able to continue to acquire and grow. And we really just want to stay focused on the acquisition side of it and continue to fill our pipeline with new investors that are interested in investing with us. And when we first got started, we had maybe 5, 10, 15, 20 leads a month coming in. And, now we keep track of that on a rolling 30-day basis. And, we've had some months where we're getting, 6, 7, 800 leads in one 30-day rolling period. And, right now I just pulled up for the webinar and we're sitting right at about 300. But, every single month we're getting new people that are coming under our fold that we're constantly having phone calls with. Our investor relations associates are doing that. And, we have a full business with this, right? We're not treating this like a hobby. It's not a nights and weekend thing for us. I mean, this is a full-time gig for us. And, we have, over 50 full-time people that are now working directly with passiveinvesting.com, from acquisitions and dispositions and our capital markets division, our asset management division, our finance team. We have our investor relations team and our investor services team. And there's a huge burden there from a labor perspective. But one of the things that we did from the very beginning is making sure that we can continue to scale and grow our team as our portfolio continues to scale and grow at the same time.
So Dan, how do you actually afford those people? If you're the big team, and we know how we afford our staff and what we're doing is, what are you guys doing to be able to staff up a corporate team like that can, help the property management team on that kind of scale?
Yeah. So one of the things we did from the very beginning is when we sat down as the partners, we said, you know what, we are not going to take home the asset management fees. Yes, we know we do make money on the acquisition fees and the upfront fees from when we were closing assets, but all of the asset management fees moving forward are going to go towards growing our team. And so then the reason why we did that is that as the portfolio grows, we'll have more asset management fees coming in, and allows our team to be able to grow with it. And so as we continue to acquire properties, we have a higher amount of asset management fees that are coming in. And as that continues to grow, we continue to find different strategic positions that we need to hire on. And it's been very kind of strategic of okay, now we need to hire this person, and now we need to hire that person. And all of these different things are what we used to do as partners. And then as we continue to grow and scale, we've been able to hire people. We have a great solid core team. And, we have, we're all remote. So we have no plans of getting a high rise downtown building and renting out an entire floor. And we could do that, but we feel like it's best for us to stay spread apart, and we stay very well connected. We're in communication every single day. And we feel like we're in the same office, but we're not. And I would say that even with the remote team, I wouldn't have probably done that if it weren't for COVID. When COVID hit, it forced us to be remote, and our team proved themselves to us that we can actually manage this remote team and do it full time. And because of that, we've been able to hire on some really good, solid people, and they don't have to move away from where they are. As a matter of fact, we've had some move to other areas that they really wanted to be living because it was a lower cost of living, but they're still making a great income, right? And of course, there are some people that we strategically hire in different markets, like our investor relations people, and we have one out in the West Coast, we have one in Texas, we have one in the Carolinas, and we purposely spread them across like that because we wanted them to be able to be at different events that we want to go to, or host investor dinners, and we don't have to be flying from the East Coast to the West Coast and things like that. But those asset management fees are really kind of how we've been able to grow and scale our team. Is as we close more assets, we have more asset management fees coming in. The more asset management fees coming in, we get to go in and hire additional people to support us.
I mean, you've built a pretty large operation at this point, especially for a syndication business, where comparatively speaking, you can control a huge amount of real estate with a relatively small group of people. But what has been like your top challenge as you scale the company?
At this point, it's acquisitions. Even last year and 22, we still had challenges trying to acquire assets. We still underwrote properties. We still, looked at assets, but, we didn't acquire as much as we wanted. Our goal was to acquire 750 million in acquisitions. And, we did about 661 million last year in acquisitions, which was still good. It's not like I'm upset or mad about that, but, we always try to set goals that we can just barely reach, that we can hopefully answer. I'd rather come short of a goal that's like 750 million versus setting the goal at like, say, 500 million and coming short of that one, right? But from the biggest struggle, I would say is really outside of acquisitions. I would say is being very strategic and hiring the right people from the very beginning. And we've only had I want to say 3 people that have actually been hired on that have been let go since we started. So the people we were hiring on we're hiring really good, solid people. And, one of the challenges that we had was making sure that we were hiring the right people, because, you interview somebody, but is it really the right person to hire on? And so last year we ended up hiring a director of HR, and that's her primary responsibility, is to manage that piece of it for us. And because at the end of the day, it was either us as the partners hiring people, or we would delegate to some of our directors over the different departments, and they would do the interview process and hire them. But that's not what they're skilled at doing. And so we wanted to be able to bring some additional skill set in there so we can make sure we continue to make some good strategic hiring decisions. And I will say right now, from the managing the people perspective, is making sure that we have plenty of residual training around leadership and time management, and really being able to focus on the areas that are the most important, right? When you think about the 80-20 rule, that really comes into play here when it comes to people. And a lot of times we're just sitting around doing just putting out fires types of emails and communications, but really focusing on like, what is it that's going to move the needle for us as a whole.
What's your outlook for this year, and how does that affect your goals for acquisitions and your capital raise goals?
Yeah. So it's a great question. And, we've had this conversation internally with our team about, yes, we do feel like 2023 is going to be a challenging year, but we did not want to reduce our goals because of that. For the same reason of, we didn't want to reduce our goal and say, okay, we only want to do, 300 million this year in acquisitions because, the market's going to be challenging. We're going to say, we want to still acquire another 750 million this year, knowing that there's going to be some challenges, but that allows us to be able to find those challenges and try to come up with the answers and start to ask questions that we wouldn't be asking around how to get over some of those challenges and be able to continue to strive to be able to acquire the assets that we want to acquire. Now, I will say that, one of the nice things about what we're doing right now is we have a diversification across asset classes. So even though maybe one asset class we might not be acquiring as much of right now, though there's other asset classes that we can continue to look at. And multifamily is still the number one asset class that we hold. We have a little over 1.1 billion in assets under management just in multifamily. The other 300 million that we have under management is between self-storage, car wash, and hotel. And so even last year, the 661 million that we acquired in last year, 420 million of that was multifamily. So our core focus is still multifamily, but we have the acquisitions teams built out for each one of the different verticals, if you will, to be able to continue to acquire in those different asset classes.
So let's talk about this other thing you did, which is really cool. You guys decided to add in other asset classes. Why did you guys decide to do that, and how did you decide to operate those?
Yeah. So one of the things we do a lot is we have a lot of interactions with our investors, and we do, investor phone calls. Obviously, we have investor follow-ups. We also have investor dinners. And one of the themes that we heard across the investors is that, are we going to start to look at other asset classes? And one of the reasons why we, kind of named our company passiveinvesting.com and not multifamilyinvesting.com or something like that is that we wanted to leave ourselves open from the very beginning to be able to add some additional alternative asset classes as we continue to grow and scale. And then once we started hearing some of that feedback from our investors, we wanted to start doing that. And so we actually, started to bring on self-storage, and then we brought on a hotel, and then we brought on the Express Car Wash brand that we have that we started last year. And I will say this, though, that one of my experiences from my medical clinics is that we have 4 locations in our medical clinics. And when I grew from 1 location in the medical clinics to 2 locations, we made a mistake. And the mistake that we made is that we took our core team that was doing really well on the first clinic and cash flowing very nicely, and we just basically took them out and transplanted them into the new clinic. And guess what? The new clinic was phenomenal. We reached profitability within the first month, and we had a full new patient schedule. We were doing really, really well. But at the end of the quarter, we looked at the financials, and guess what happened to the first clinic? It started to tank. It started to take a nosedive. And it's because we took our core team out of what was really doing well and took them out and transplanted them into something that was new. And so with that experience, one of the things I learned is that you can't do that, right? And so one of the things we did not want to do, we have not done, is we haven't said, okay, multifamily acquisitions team, we want you to start acquiring self-storage. Then we're going to have you start to add that into the mix of what you're doing. We didn't want to do that. So from the very beginning, we said, okay, if we're going to open up and go into different asset classes, we want to be able to hire on a core team that can handle the acquisitions, the dispositions, the asset management, everything around that particular asset class. Now, there's certain areas like investor relations, investor services, and the finance team. All of those can be shared, right? I don't think you definitely necessarily need to have a separate team. Now, we've had to hire on additional team members because we have additional, things that have to get done from the finance team and stuff like that. But from the very beginning, we made sure that we hired on a separate team that would be over that particular, business unit or vertical of self-storage, and then another one for hotel, and then another one for the Express Car Wash brand that we're building.
What's your vision for passiveinvesting.com? I mean, you guys are acquiring, a good amount of real estate every single year. Do you have an exit in mind, or a vision, or a longer term vision? Like, what do you see?
Yeah. So, I mean, I get asked this question a lot, Michael. And, at this point, nobody could pay me what I would want to be able to exit this business right now. It's so much fun. I enjoy it a lot. And I mean, it's just, the thing that I probably enjoy about it the most is that as an entrepreneur, I like different things I like change, right? I like to see new things added. I like to see new initiatives being created. And, that's one of the things that I kind of felt stuck in the clinics, is that I got into a certain point and I was like, I've mastered this thing. I want to try something different, right? And so, the nice thing about real estate, as you know, is that there's different asset classes. So adding on different asset classes is definitely going to be in the mix. One of the things that we're actually, working on right now, and we're investing our own money in first, is a pickleball concept. So,
pickleball, you said it all. Tell me, where do I send the money?
Yes. And I started playing pickleball in May of last year. I've been doing racket sports for many years, and fell in love with pickleball, and really saw the demand for it. And so the partners put in our own money, and we're building a 30,000 square foot facility with 12 courts, and we're developing an app that will run the whole thing with very low labor, if any at all, except for maybe maintenance or ancillary support staff with running events and stuff. But that is eventually going to be a franchise model, and we will likely syndicate communicate that in some form or fashion. But of course, that's such a new concept that we can't just like all of a sudden, I wouldn't want to take the risk of taking somebody else's money and putting it into work like that when I haven't proven the concept myself, right? And so we're putting our own money into it first, developing all that stuff first, and then once we have the model proven, about a year from now is probably when we'll have a more like a concrete, ability to see some sort of path to profitability with them. But because of the pickleball is the number one fastest growing sport in America right now, it's definitely in high demand.
Wow, that's super cool. So when you go into each asset class, you have to kind of source people that know that. So do you have like a quarterback that kind of tees up that sector, your business? How does it work on the people side as far as just finding those specialty people that work in that industry?
Yeah. So each asset class, the way we've kind of started it is we, as the partners, start that asset class ourselves. So we'll go in there, since we have our core team working on these other asset classes, we'll go in there and actually start to, work on broker relations and building the relationships and touring assets and really figuring out the business side of it, of the acquisition side, and making sure that the underwriting makes sense and the financials. And then once we feel comfortable with it and we have that model, that's when we go out there and try to find people that we can bring onto the team very strategically. And most of the people that we've brought on have been people that are like working with some other person that have more experience in that asset class, right? Because investors are going to ask us, like, you just now started doing self-storage. Why would we trust you? Well, because we did just get started in self-storage, but the people who are actually acquiring these assets and managing these assets, they have, 5, 10, 15, 20 years experience, and we build on their credibility and bring them onto the team. Same thing with asset management around multifamily. Like we had no experience managing multifamily assets, but you know what? Very early on in 2020, we actually hired on a asset manager who came from a institutional group, and he managed a multi-billion-dollar portfolio of multifamily for one of the largest national REITs in the country. And so for us, we were like, that's our guy. Like, he has the experience and we're leveraging him. And yes, we may not have been managing assets through multiple market cycles, but we brought somebody on that has, right? So being able to hire on good quality support that has great experience and a very deep experience and a very wide amount of experience has been very, very helpful as we've continued to expand in these different asset classes. Obviously, there's not one for pickleball, but that will be us because it's so brand new, right? But
who's the pickleball expert out there?
I'm probably the one that pushes it the most because I enjoy pickleball like a lot. And I'm usually out there playing a couple times a week, and the local people there all know me now as the guy who's building out the brand. And the brand that we're building out is called 24-Hour Pickleball. And so you can go to 24hourpickleball.com and find out more information there. But it's to be a kind of a country club style pickleball facility that's has membership base and does tournaments and revenue, tournaments and league play, and has revenue coming in from like coaching revenue. And we'll have food trucks come in, and we'll have different types of events that are happening, and corporate events. And so there'll be somebody we'll have to hire on to kind of manage some of the event side of things, but there is nobody that's like in there checking people in and out, or managing a pro shop. It's all going to be run by the app that we're actually developing right now, that we should later this week or tomorrow or next week have an actual beta version of the software and the app that we'll be able to test out, which is always cool when you start to develop something like that, to kind of see the working product of it and go, hey, let's change this and modify this, and what about this feature and what about that feature, and really seeing it come to life.
I love it. Hey, Dan, how can people connect with you so they can keep track of all your crazy things you're up to?
Yeah. So obviously you can go to passiveinvesting.com. One of the ways to connect with me on LinkedIn is just go to linkwithdan.com. That just goes straight to my LinkedIn profile. You can connect with me there. And, obviously, you can follow us on the Multifamily Investor Nation podcast, and, the YouTube channel and the website and stuff like that. But those are the primary ways to kind of reach out and get connected.
It's awesome, Dan. Great to have you on the show.
Thanks.